the remarkable person that knows all about Irish regulation from the Compliance Institute of Ireland. Welcome on stage, Dermot.
Thanks, Rob. Hi, folks. Great to be here. For those that don't know me, I'm the president of the Compliance Institute. It's a member-based organisation for compliance officers in Ireland. That exciting topic that everybody hates, right? But no, I'm really delighted to be here today. We're always looking for members, and we're definitely going to be looking for more engagement in the fintech, regtech space. And it's an area where I'm very much keen to set up a member working group. So if there's any volunteers that'd love to be involved, please let myself or my colleague Kira know. As I said earlier, we very much are proactively putting on educational events, particularly in areas of interest to the members, and that would include the regtech and fintech space. So look, throughout the day, please feel free to approach me, but I'm not going to speak for much longer now because nobody's here to hear me. I'll hand over to Russell, who's going to talk us through some of the regulatory focuses in your areas. Over to you, Russell.
Good afternoon, everybody. And thank you, Lily, for inviting me to speak in the graveyard slot. I was going to start off by thanking the previous speakers for setting a standard I could only easily excel, but unfortunately they were excellent, so I can't. Oh yeah, I got to move these myself. Cool. So very briefly about myself. I've been in payments for 22 years, in financial services for 44 years. And before you do the calculations, it doesn't make me old, it just means I started young. I spent the last 7 years up until 6 months ago as the Senior Payments and Authorisations Specialist with the Central Bank of Ireland's Payments Authorisation team. I'm out on my own since as an independent payments consultant, and I'm also working as a payment sector specialist with PwC here in Dublin. Before that, I did 36 years with Bank of Ireland, the last 7 of which I was seconded to the Irish Payment Services Organisation. So involved in payments quite a long time. There's some other crap about me up there as well, but we won't worry about that. What I want to talk to you about today, seeing as we're here in Ireland, and it's the first chance most of us have had to get out at any conference at all, bonus for us that are Irish to have one at home. But why Ireland? Why pick Ireland as a place to set up as a regulated payments institution or e-money institution? I'm going to look at how the sector has evolved here in Ireland over the last number of years. Some of the significant developments that I see coming down the line. Have a look at the Central Bank of Ireland, where I worked until recently, which is the regulator here in Ireland. The challenges that have to be surmounted for firms here either already regulated or those seeking authorization, and then just how to exploit the opportunities of being a regulated financial service provider, indeed payment service provider here in Ireland. I nearly said next slide. Why Ireland? Okay, we're a global centre for financial services, technology and so on. We've got a really, so I should say, I don't know if they're here in the room yet, but I'd like to thank my colleagues from the IDA Ireland for supplying with some of the facts and figures that are coming out here. But yeah, Ireland is a very attractive corporate taxation rate of 12.5%, and we have double taxation treaties with most places in the world. There's grants available for research and development, for employment, and for training. And the IDA, as I mentioned, is the inward promotion state agency for firms coming to Ireland. So if you're one of those firms and thinking of doing that, please do contact them. We have a very skilled and educated workforce. The technology sector here in Ireland employs over 100,000 people and 40,000, a further 40,000 in financial services. Unlike quite a few of the people in this room, we're still in the EU. And so that means we have full passporting access to the EU and EEA. We're English is our primary language here, which makes it useful as most countries across Europe have English as their second language. We have the common law structure, and I'll say a bit more about the financial services regulator, but it has a reputation of being a strong and hopefully fair regulator. Why Ireland? It's a great place to live. On the official satisfaction ratings, we score very highly, as you can see from the chart there. We also have a tax system which some might regard as pretty horrible from a personal taxation point of view, but it is very progressive, and it does address inequality amongst income earners, so it's rated quite well in that respect. We've also won the Eurovision more times than anybody else. This is in case you're falling asleep after lunch. We're also responsible for Guinness and most of the rain in Western Europe. Confidence, again, thanks to the IDA for this one, but we've sprung out of the COVID that Robert was mentioning there recently very well compared to the European average. Business confidence is very high here and continuing to grow. We have a 4% share of foreign direct investment projects in Europe, which is pretty good considering we only have 0.6 of the population. As I mentioned earlier, we're very, very fintech friendly. Dublin and indeed Ireland is a huge hub of fintech firms and activity, some regulated, which I know about, and some not regulated, which I don't. We have very high share of employment in the high-tech manufacturing and knowledge-intensive service sectors. We have a very, very strong strategic plan for the development of the IFS industry here in Ireland. And we've just recently announced a record 165 billion capital investment programme over the next few years up to 2030. So that's my piece on Ireland. It is a good place to live. It is a good place to come for payments firms. And just exploring the regulated sector here in Ireland, I joined the Central Bank at the end of 2014. By the end of 2018, we had 14 firms authorised that you can see there. In my first year there, we authorised 2 firms. That was a busy year. And then we authorised 1 in each of 2016, 17 and 18. A short 3 years later, in Q4 of 2018, we'd gone up to 22 payment institutions, 17 e-money institutions, 4 AISPs, that's account information service providers, and 1 other, which is An Post, which is the post office in Ireland, which didn't have to seek authorization, but is supervised by the Central Bank in its provision of payment and e-money services. That's a 200% growth in just around 3 years. So what are the main contributing factors to this? Obviously, Brexit was a huge one. You've probably all heard of Brexit, but the consequences for a lot of ordinary payment services and e-money services firms in the UK was they were passporting into Europe. Probably they may have started in the UK, but Europe is a much bigger market. And suddenly, through no fault of their own, as it were, well, I suppose depending which way they voted, but they suddenly had to establish somewhere else in Europe if they wanted to continue those services. And Ireland has proved to be has done very well, has been a huge beneficiary of that. A lot of firms came here, I suppose, both because of the geography, English speaking and so on, as I mentioned, and hopefully the reputation of a strong regulator here in Ireland. PSD2, which is going to be talked a bit more about one of the panel sessions tomorrow. But apart from a lot of other things that PSD2 did, it introduced, or it made the provision of account information services and payment initiation services formal or regulated payment services. So that's created the opportunity for a lot of fintech firms that are providing extra value-added services in that space to seek authorization or indeed registration if it's AISP only, and that's added to the momentum here in Ireland as well. Technology has been alluded to a lot this morning. And I think it was mentioned by at least 2 of the speakers earlier, the convergence of technology and so on. Technology is making it easier for consumers to consume payments, whether it's as part of Uber apps or anything like that. So that's driving the number of use cases up and the business cases for firms setting up as regulated payments or e-money institutions. COVID-19, the move away from cash has been phenomenal. We had contactless cards and so on. We're beginning to get used to the Apple Pays and Android Pays and so on. But suddenly when touching things became the wrong thing to do, the amount of people that were swore they'd never use these things were tapping their phones and all the rest. And of course, it drove a lot of physical shopping to online shopping where payments have to be done electronically. Sorry, excuse me. So the the total volume of electronic payments has been going up, thereby increasing the market for everybody. And then Ireland Inc., as I've mentioned earlier, it's already like a lot of the internet giants are here and so on. There's the taxation and various things I mentioned earlier. So all those have come together to really drive the volume of applications and regulated firms here in Ireland North. Do you expect this growth to continue? Yes, absolutely. In the work I do now, I'm helping firms that are applying for applications. Some of the legal firms are represented here. There's a lot of members of the FinTech and Payments Association of Ireland. We know from all this and from talking to each other, there continues to be a lot of applicants, a lot of firms coming to Ireland and applying to the central bank for authorization as a payment institution or an e-money institution. So, this couldn't be better. I did this myself very quickly a few days ago. So what's coming down the line? And it's everything that everybody talked about this morning. So thanks again, previous speakers, for setting the tone. But I totally agree with them. I mean, the crypto and digital you can't get away from. Here in Ireland and in other European countries, we have the vast virtual asset service provider registration facility. So firms can register with Central Bank here in Ireland. And then coming down the line from Europe will be the MiCA, the Markets in Crypto Assets regulation, which will probably tie into the current e-money regulations in some way. But at the moment, providers of crypto services generally are not regulated. Now, a lot of these firms do seek to provide payment services in addition to the crypto services, and they either with the same company or perhaps a sister company apply for an e-money license here in Ireland or elsewhere, but we're seeing more and more use cases of that. The changing payment rails, open banking, request to pay, instant payments. The panel before lunch talked about all of those things, so I won't go into them in any detail, but I think there's no escaping these things. And it's interesting to hear Michael from MasterCard and that earlier, the traditional payment or card schemes recognizing that things are changing and being involved in it. I think there's no stopping it. It's more advanced in other countries like Lithuania and so on, but I think we're seeing it coming across all of Europe. And then buy now, pay later, whilst it's under different legislation because it's credit. It's not payments per se. In consumers' minds, it's as was depicted earlier by the lads in the panel, it's very much associated with the payment, even though it's a separate facility. So it's going to be intertwined with payments going forward. So about being regulated in Ireland specifically, who regulates the sector and how? It's the Central Bank of Ireland, as I already mentioned, which is regarded as a highly competent and fair regulator. It has considerable technical expertise. It's been building up its IT prowess over the time that I was there, and under both the e-money and the payment services application requirements, there's a considerable amount of the guidelines now focused entirely on IT, and we have a team, or there's a team there in the Central Bank that assesses those aspects of the applications. Central Bank is also very strong in making its expectations clear of the high standards it expects, strong governance, sustainable business models and so on. It sets high standards, it expects high standards, and it gets them. Just to tell you a little bit about the structure of the Central Bank. There are three main pillars there. There's prudential regulation, there's financial conduct, and then there's the central banking function itself. The two on the left were previously under the financial services regulator, which at one stage was a separate entity here in Ireland, but since the crisis it was put back together again under the one central bank. In Q2 of 2021, both the payments authorizations team, which I was part of, and the payment supervisions team had been in the Consumer Protection Directorate. And a decision was made to move them over to the basically the Banking Supervision Division, Credit Institution Supervision Division. And along with that happening, while the two teams had been in the same reporting line up to that, they're in different divisions within that new directorate, sorry, not within the new directorate, but a new directorate for payments within the central bank. I pointed out to one of the deputy governors of the central bank at the time that, and sorry, I should say that those of us on the payments teams, both the supervision and authorizations team, weren't part of this reorganization. It wasn't created by Eton, wasn't caused by anything to do with payments. A director had left the central bank the previous year, and they decided to split his directorate up amongst existing directorates. But I wasn't sure, and I stated this, and this is sort of a challenge for everybody in Ireland. Is it necessarily the best thing for a central bank or the regulator to move its e-money and payments functions in with under the banking supervision, when the whole idea set them up in the first place was to have them separate from banking? There's both the potential image that sends out, even if unintended, and then perhaps consequences of senior management in a banking division making decisions and so on relating to payments firms. I'm going to touch on some of the things that seem to be emerging as a result of that. The challenges for the regulated firms in Ireland. On the 9th of December last, just as people were getting ready for their second COVID Christmas, the CEOs of all the regulated payments and e-money firms in Ireland got a letter, the first real communication from the banking division to the payments firms specifically, and essentially asked them to come up with a board attestation by the 31st of March, which is the end of this month, confirming that they were complying with all their obligations under safeguarding, under the payments regulations or e-money regulations, depending which is applicable, and that they were compliant with any conditions of authorization that would have been imposed at the time of their authorization. Now, on the face of it, there was kind of mad panic around the industry, thinking, what's all this, and have we time to do it, and all the rest. But actually, the safeguarding aspect of it had been flagged by the central bank for a number of years while I was there, that this was a key issue, and as it is for many regulators across Europe. I mean, the main difference really between banking and other sectors and the payment sector is that the payment sector have to safeguard users' funds, which is the protection that consumers and so on have in the event of something going wrong. When people sat back and thought about it, actually, hang on a sec, safeguarding, you know, we have a legal obligation, a regulatory obligation to be doing this anyway. So why should we be afraid to attest to the central bank that we're doing this properly? And then conditions of authorization, most firms don't get special conditions of authorization. Some will have, but there's a standard condition of authorization we put on most firms, which is basically they can't change the payment service without permission from the central bank first. So actually, that may not have been as foreboding as it initially was taken by the industry. And actually, I think it's quite an efficient way of the central bank, which is a much bigger sector now, as you've seen, and hasn't been able to as actively supervise as it might have liked to because of COVID and working from home and so on. I think it's probably a good way for the central bank to get a snapshot of how well the industry is doing its safeguarding obligations and any conditions of authorization. Sorry, the other bit then, sorry, at the end there, just saying it. If a firm was so bold as to find out that it was doing something wrong, it then had to report to the central bank as what it was going to do to fix it. But hopefully there won't be too many of them. Then in a more general part of the Dear CEO letter, the central bank set out where it saw its key priority items, and not surprisingly, governance and risk management, conduct, safeguarding, business model and financial resilience, operational resilience, financial crime, and resolution and wind up were the main ones. Now, they're probably bang on for banking. I personally would have some issues with two of them, which would be the financial resilience and the resolution and wind up, in that the payment services regulations and the e-money regulations make specific provisions for each of those, in that the businesses have to adhere to regulatory minimum own funds requirements, which covers the kind of prudential end of things. And as I said, all the funds have to be safeguarded. So the importance of resolution and the importance of financial resilience are not as relevant for payments firms as they are for banking. But that's something for the central bank and its people to work out. Then the challenges for applicant firms. I've mentioned the high standards. The central bank does set high standards, and I was talking to somebody there earlier. Applicants give out and moan about the central bank holding to these high standards, but as soon as they get authorised, they're then proud of those high standards, say, oh yeah, they should be even higher now, that we're regulated in Ireland. The central bank has a very busy pipeline of applications. Obviously, what I know from my days there, I can't divulge specifically, But if one looks at the service standard reports that they release every half year, it's fair to say that there's many, it's high into double digits of figures of firms that are in that pipeline at the moment. As I say, from the industry, we're generally aware, or we are aware of a lot of other current, firms that are currently about to put applications in or considering putting applications in when establishing in Ireland. The authorization principles are there. I won't read them out. They're pretty much the same things that were set out in the priorities in the Dear CEO letter. And the Central Bank has also flagged, and in my time there, 7 years there, we probably did half a dozen maybe interviews of PCF roll holders of applicant firms. Now they're proposing to do PCF roll holder interviews as standard. And I've already heard of some people being called. And again, a bit like the Dear CEO letter, while it might sound a bit scary at first, actually, if a firm has done its due diligence before appointing people, the people are who they say they are, they shouldn't be afraid of a an interview about their fitness and probity for the role. So that's something that's going to happen going forward. And then there's a quote there from the Central Bank itself in the red, and it's stating clearly that if a firm doesn't toe the line, basically, it can expect a prolonged assessment period. But in my time there, I guess it's still the same, the process was very clear and open and transparent. Firms knew where they were in the process at the whole time. Where they were in the process the whole time they were in it. And if they do address the regulatory obligations, they will get through that process. But if they don't, well, they can expect to get delays. You hear some horror stories about how long firms took, and the Central Bank can't respond to that. The process works that, I mean, if the firm gets questions and takes ages answering those questions, the Central Bank can't really do anything about that. So as I mentioned, it's a very clear, open, transparent authorization process. It has very clearly defined phases, which are there on that graphic on the right. It starts with a pre-application meeting. Then there's service standards around all the stages after that. The Central Bank will acknowledge within 3 working days receipt of the application. It will perform what it calls a key information check within 10 working days. It will, once it gets past that key information check, it moves into the assessment phase, which is 90 working days. But there's a caveat on that, in that if the Central Bank does ask questions of the firm, that clock will stop until it gets back those answers, which is why sometimes the Central Bank has no control over how long it takes before a decision is actually made in terms of elapsed time. Then once the firm gets through that assessment phase, typically the decision is made pretty quickly, and then once any pre-authorization requirements have been satisfied, a decision is made, the decision letter is issued pretty much instantaneously, but there's a 10-day service standard on that. And despite what people might say and hear, the service standard reports, both the half 1 and half 2 for 2021 show actually 100% achievement of service standards for the payment sector in all those areas mentioned there. So whilst it's a busy pipeline and it may be moving a little bit slowly because of volume at the moment, it does seem to be performing very well. And then the Central Bank itself has said it will deal with all applications for authorization in an open, engaged and constructive manner. And my experience when I was there was it does exactly that. Then my advice for applicants, it's not a quick fix applying for authorization as a payments institution or an e-money institution. It is a fairly lengthy and arduous process with any regulator, but the regulations are very specific. So I mean, do make sure you understand the regulations and the process. Get advice and support if you need it. Well, I would say that given what I'm doing now, but seriously, it's not easy. I mean, there are firms that may have been authorized in other jurisdictions would be fine with this, but a typical fintech firm starting up, into the regulated space for the first time will generally need support, and that's available at all sorts of different levels. I won't try and say any of it now. And one thing I always say is, don't forget, we get this image of a big, dark, sort of foreboding, impersonal regulator, but it's ordinary people. I was going to say like me, but it's ordinary people in there, and they don't know your business. They're assessing pieces of paper. It's on screen nowadays, obviously, but they're assessing information for the first time and comparing it to the regulations. They don't know your firm. They don't know the acronyms. They don't know the technology, maybe. So it's very important to make your application the best application it can be. And if you do, that application will go through fairly smoothly. If you don't, the Central Bank has warned it may not. I would say to firms, answer all the questions fully, make sure you do answer the questions fully, but only answer the questions. It's not Dragon's Den, it's only showing compliance with the regulations. It's not a shareholder's pitch, but if firms put in other stuff, the central bank has to go through that and work out whether it's relevant and so on. The guidelines, thankfully since PSD2, the application form is essentially a whole set of guidelines, so it's nearly like a list of things to do, which makes it much easier to compartmentalize the whole thing, which is probably better than it was before when it was one big massive business plan, another big massive program of operations. I'd also warn firms that the process, as I said earlier, is quite lengthy, quite arduous. So do be prepared to have the sufficient resources and time available to deal both with the initial application itself and then any subsequent comments that come out of the central bank that need to be dealt with, because obviously the firm's interest to turn them around quickly and get back to the central bank with the right answers. And on the good news side, I suppose, is that the regulations actually require the central bank to grant that authorization if the firm demonstrates compliance with its regulatory obligations. It's not a subjective decision as such; it's an objective decision. So the good news is, I suppose, for firms is that if you do get it right, you will get authorized in Ireland in a reasonable time. I think on that note, given the time, I'll take any questions, I guess. Thank you.
Any questions on the floor? I might go for one, so if that's okay, Russ, go down there.
You go first.
But any pitfalls that you would point out to any of our attendees today in terms of where the regulatory authorization process falls over?
Believe it or not, one of the most common mistakes that I came across in my time is firms not being able to actually clarify which payment services they were seeking authorization for, or e-money and payment services in the case of e-money institutions. Probably came across more like brochureware, which is what they'd like their customers to see, which is fair enough. And as I say, with cryptos and things, there might be other things tied in with that. But from the central bank's point of view, it needs to, the payment services, those of you familiar with them, are listed 1 to 8 in the regulations. Most go for payment service 3, which is providing an account with bits and pieces on it, or 5, which is issuing or acquiring. Firms find it difficult to put that in terms of what they're actually applying for authorization for. They say we're doing this flashy card and a flashy account and we're doing this. They don't actually say we're applying for payment service 3 or 5 or so on. That's probably the most common one that I've come across. And then the other, maybe not so much now that we've moved on a little bit from Brexit, but the other was, I suppose, demonstrating that the heart and mind of the firm would be here in Ireland, that it wouldn't be controlled by group. And I can understand firms particularly having to duplicate operations because of Brexit or some other reason, not wanting to spend money unnecessarily. But at the same time, the central bank's interest really is only in the entity seeking authorization here in Ireland. It doesn't really be concerned about the greater group, other than perhaps for outsourcing and so on. So that's probably another common pitfall, is not putting enough commitment to the board, senior management, and number of staff here in Ireland.
Thanks, Russell. Over to the question.
Thanks a lot for the presentation. During your time with the CBI, did you do any benchmarking against the other central banks who do e-money applications within the EEA? Because, I suppose my question is from a perspective, if I'm a fintech who's looking to get an e-money license, you have hypothetically 30 different jurisdictions as options, and you're going to be considering various from the likely time from start of application to end, and the oversight that you will experience there, and as you mentioned there in your last answer around whether you should have headquarters and a substantial staff in that jurisdiction. So I was just interested if you benchmark. I think Lithuania has 65 e-money companies, primarily fintechs, and it clearly seems to be a favourable regulatory environment there.
Yeah, no, good question. The short answer is no. A number of years ago, the Consumer Protection Directorate, where the team sat at the time, did benchmark itself against the regulator in the Netherlands, but that was more general consumer protection, not just specific to payments. And since then, the short answer is no. That said, sometimes there are direct comparisons. Just to clarify, the Central Bank of Ireland does not have a promotional mandate. Other regulators do. But anecdotally, I think the central bank stands up pretty well against Lithuania in terms of timeframes and that. They've obviously authorized more, they've promoted it more over there. But we talked, the Lithuanian regulator quite a lot, and they seem to hold the same sort of standards that the central bank does and so on. I'd have no reason to think that we're vastly different. And recently a firm that was already authorised in Ireland got authorised in the Netherlands, and the guy told me it took 8 months, which is not completely a million miles away. I would have said a year ago or 6 months ago, even around the time I was leaving, the average people didn't keep a record as such of it, and it depends how long stuff was out with firms. But I would have thought 9 months or so would be around the average. Might be a little bit longer now because of the transition last year. I'm hoping it'll go back down again. And based on what we're hearing from the UK at the time when it was in the EU, we weren't out of kilter with what we knew of. But sorry, in terms of a formal benchmarking, no is the answer. But hopefully the rest of the answer helps a little bit.
So another question in from the attendee online. There's 52 applications currently in with the CBI per their Q4 report. Do you have any reason for that delay, and also considerations as to why there have been no e-money institution VASP applications approved today?
I can't speak, I'll take the last one first because it's the easy one. I can't speak about the VASP one because that application goes to the anti-money laundering division of the central bank, which I didn't work in, and it only really started just before I left, so I have no idea. But it is, let's say, disappointing that that's been open since last May and there's been nobody appearing on the register. But the virtual assets isn't my area, so I'm not going to say any more about that. I suppose an unintended perhaps, but not unexpected consequence of a reorganization, particularly in the middle of a global pandemic, is that things are going to slow down. But yeah, I mean, there was 2 authorizations and 1 registration, 2 authorizations of payment institutions and 1 registration of an AISP last year, versus say 2019. I think 19 firms were authorized. So it is quite a drop. And just to clarify on the 52, there could be some multiples in that's the number of applications recorded as being received, as far as I know. So if a firm comes in, doesn't pass the key information check and has to resubmit, it would probably be double counted under those particular figures. That said, the number probably isn't too far off in as much as I know. But I have heard from former colleagues there that they were optimistic that there'll be a considerable number of decisions being made, hopefully all positive ones, in the near future. So I don't know what that actually means in terms of near future, but hopefully if we see that pipeline moving again, it'll give, I suppose, a good sign to the industry. And just to go back to the very first part of your question, one of the issues that we were seeing, and that's part of why I put in the get advice if you need it, sort of, as the numbers went up, it meant we had more and more poor applications to deal with, and they take up our time as well as ultimately the firm's time. And because of the volume they're getting at the moment, in as much as I can read about it, they're now basically even less tolerant of poor applications and not letting them pass that key information check stage, or sending them back saying, look, we can't handle these, we got to handle the ones that are good. So really back down to what I was saying in the formal part of the presentation, make that application the best application it can be, because they are human beings in there. Like if they've got a pile here and a pile there, and these are the good ones, these are the bad ones, you want to be in that good pile. And they're not doing nothing. They will be progressing applications. They have the statutory obligation to do that. And they're mostly anyway good people in there, and they're very conscious of their obligations as public servants. So yeah, I mean, it's the central bank, for those of you who don't know, maybe from not from Ireland, is moving towards being funded entirely from the industry. So firms are obviously conscious of the cost of the central bank. So it's set a cap on its total number of staff in a strategic plan of, I can't remember what year it is now, but it's setting a cap. I think it was around 2,100 staff. So that makes, if somebody leaves like me or somebody else, makes it more difficult to fill those positions. So there are certain pressures on them, and there's always that balance between cost and output from a regulator.
I might take a final question if there is any on the floor.
Maybe from your perspective, the regulator seems to be playing a very active role in the evolution of payments. And so we see them in some certain instances encouraging certain uptake of certain solutions. In other instances, they create regulation that could serve as a barrier to entry for other players, for new players. But in some cases, we've also seen them come in as players, active players in the market, offering their own solutions. What's your view on those different roles, and what could be the risks associated with that?
Well, the Central Bank of Ireland, I can only speak for them. Well, I can't even speak for them anymore, but when I was there, definitely did not take an active role, certainly where I worked, in trying to shape the industry here. It did and does have good ongoing engagement with the industry bodies in Ireland, like I mentioned, the FinTech and Payments Association of Ireland, the E-Money Association as well, and they engage with people like that, so they communicate. The structure in the central bank is under the central banking pillar that I showed in the earlier slide. There's a division called PSSD, the Payments, Settlements, or Securities and Settlements Division, and it oversees payment services in Ireland. So it would have the responsibility of influencing or whatever if it was to. But I actually worked there in a project before I joined the central bank, and I know a good bit about them from the time I was in there, and they tend to not take a proactive role on, they just oversee it. They will intervene if they see, perhaps a monopolistic situation developing or something like that. And Ireland is, quite short of retail banks and so on, who are traditionally the main payment service providers. But as you saw from the second slide of the authorised firms, there's a whole rake of acquirers and all sorts of entities here. So I suppose, again, the short answer is no, the central bank doesn't take a proactive role. And it doesn't have a business development or a promotional mandate, as I said. I'm not sure if that actually answers your question, does it? Was this
Yeah,
something?
maybe I wasn't referring in particular to the Central Bank of Ireland, but yeah, I guess it's what I can take away is that they take a more a less interventionist approach, and that to control the risk.
Yeah, okay, and certainly from what I see of the sector here in Ireland, both the regulated firms and the potential, the applicants would like to see more guidance from the central bank on certain aspects of both the process for getting authorised and then the provision of payment services in their markets. But obviously, in Ireland's only a small part of a much bigger European market, and most of the firms that you saw up there, most of their customers are not Irish. They're out of there across Europe. Most of them are passporting to probably all or most of the EU EEA countries.
Okay, thank you.
Okay.
We might wrap up there, guys, and we set up for the panelist discussion. I want to introduce. Thank you, Russell, very much for the intro. Some great regulatory insights there. And I definitely see the banking side and the crossover with PSD2. We're seeing more of that now with the DGS operational requirements and the linkages there to the PSD2 disclosures and sign-offs. So next up, we have Vahid Bassett. And essentially what we're going to be looking at is, sorry, bear with me a second. The trends that are shaping the fintech landscape. And he's going to be joined by Isabella Frangu, Nicholas Mesaritis, Joe Morley, and Conal D. So guys, I don't know, Russell's obviously touched on the regulatory space just while the guys are getting ready, but what I do find is the regulator is very active. From my side, I've been involved in a lot of the authorization sides as well. And look, the key is getting the detail right at the time. But I'll hand over to you guys now.
Hi. Shall we just introduce ourselves?
Yes,
My name is Nicholas, and I currently work as CTO of Ecombanks. Ecombanks is an EMI licensed by the Central Bank of Cyprus.
Hi, Joe Morley from TrueLayer. I'm General Manager of TrueLayer, which is the leading provider of open payment solutions for merchants on open banking rails. We're the leading provider in the UK and rapidly expanding in across Europe. Also relevant to Russell's last session, we're licensed here in Ireland as a payments institution. If I'm not mistaken, we're